Hello and welcome everyone. I'm Pete Rizzo, editor-at-large at Kraken, the best place to buy and sell Bitcoin and cryptocurrency. And I'm your host for this special edition Kraken live stream. To discuss today's trending topics, I'm joined by Sui Chung, CEO at CF Benchmarks, a Kraken subsidiary focused on providing price indices for major crypto assets. Sui will be joining us shortly to discuss his outlook on the Bitcoin and cryptocurrency market. But first, some data highlights from our latest Kraken intelligence report. Why did the crypto market surge for the month of November? Our analysts highlighted three key reasons. The first, all-time highs, favorable technicals, fundamentals, and outspoken support from institutional investors pushed Bitcoin's price to a new all-time high above $19,000 in November. And trading volume reached 86 billion, also a new high. Next, smart money moving in. Wallets holding more than 100 Bitcoin accumulated over 56,000 Bitcoin over the course of the month's trading. This suggests that, quote, smart money may see more upside ahead. Elsewhere, altcoins such as ETH, LTC, XRP, and others outperformed Bitcoin amid surging demand across the market. Finally, stablecoins, an increase in stablecoin usage appears as if it's being driven by an outflow of Bitcoin from major exchanges. The increase in stablecoin activity likely indicates that new demand is entering the crypto asset market, a sign adoption could be set to continue in 2021. Once again, you can download that report, A New Era, on Kraken.com and access more free Kraken intelligence. Now our guest. Welcome, Sui.
Thank you very much, Pete. I'm very glad to be here. Good to see you again.
Definitely, and looking forward to our chat. Wanted to start with Bitcoin and the broader crypto market. Over the past few months, there's been a dramatic change in I guess what you could say, market participants, right? More options for people to choose from, and some really big household names. So I understand you have some new data on how one of those new entrants, PayPal, might be impacting the market. I'm curious if you could begin just explaining how does PayPal's offering work? How is it enabling you to buy, sell crypto assets? And how does that compare to what we see or what we've known before?
Yeah, Pete, thanks very much. As you mentioned, November saw it was a very interesting month where we had, the last time we spoke, we talked about new institutional participants visible in the Bitcoin market via the CME. And I guess through November, what we've seen is the other end of the scale, which is, as you mentioned, PayPal opened up its offering, opened up cryptocurrency buying and selling and holding for PayPal users. And they have done this through the standard PayPal application, whereby any PayPal user can buy and hold 5 cryptocurrencies right now. They offer the service for Bitcoin, obviously, Ether, Litecoin, and Bitcoin Cash. And it's a little different from what some of your viewers may be used to, i.e. going onto an exchange, buying Bitcoin, storing private keys, etc. Here, PayPal's service is effectively a walled garden. So you can use PayPal to acquire the cryptocurrencies, and they are held in your PayPal account. However, you cannot yet send that cryptocurrency to another user, PayPal or not. So it has to stay inside your PayPal account, your PayPal wallet. And you can sell the cryptocurrency for fiat currency through your PayPal wallet. So your PayPal wallet really continues to contain fiat currency and can contain, if you choose to acquire it, cryptocurrency.
Well, still quite a big deal. Obviously, PayPal, a household name from the internet boom. So at CF Benchmarks, I know that you guys are always kind of compiling and watching the public data around the markets. So I understand you have some insights into what we might have seen so far from how these new buyers are interacting with the market.
Yes, Pete. So The way that PayPal offers access to the crypto markets is through a provider called Paxos. Paxos is a US-based crypto enterprise. It offers custody services. It offers OTC trading for larger market participants. And it also operates an exchange, a relatively small exchange called itBit, but a long-standing exchange, has been in the market for a long time. And all of their offerings are regulated as being New York based. They're regulated by the New York Department of Financial Services, and their custody offering is a qualified custodial offering as per US regulations. So the partnership between PayPal and Paxos, as we understand, is obviously the buying and selling goes through the Paxos channels, and then the custody is provided by Paxos as well.
I see. So the data I think that we've found is that we're looking really at then itBit's volumes and then sort of extrapolating the impact of PayPal then on that market.
Exactly, Peter. So as I mentioned, typical PayPal users are relatively small. They can be merchants, small merchants, and private individuals, of course. So it would make sense that their orders to buy or sell cryptocurrency would effectively be routed through the itBit exchange. Unlikely to be routed through the OTC offering. As we mentioned, the OTC offering is very much for larger market participants. And it's very likely, at least at this stage, the manner in which PayPal has released the offering, it would be for relatively small amounts, so would go through the itBit exchange. You're absolutely right. And the itBit exchange is, of course, a contributing exchange to our CME-CF Bitcoin reference rate, as well as our CME-CF Ether dollar reference rate. And it's through this prism that we think we've gained some insights as to the sort of size of flows that we've been seeing coming from PayPal.
Very interesting. Right. And I think I looked at some of the data and you were able to present sort of a volume look before and after. Is that correct?
That's correct. So PayPal first enabled the offering on October the 12th of this year. And what we've done is look at the 60 days since October 12th, that period of time. So basically since the PayPal offering has been enabled. And we look at the 60 days previous to October 12th to compare like. And what we see is the Bitcoin volumes coming via itBit that are transacted on itBit. On the left-hand side of this chart, you see the bar. The bar represents the total volume of Bitcoin dollar trading on the itBit exchange in the hour between 3 and 4 o'clock London time. Now, our Bitcoin reference rate is calculated from transactions conducted in this 1 hour window, because this is the time when both the European and US markets and people in general are awake and at their desks, etc. So it's the most liquid hour of the day. And given PayPal's very strong penetration, of course, in the US and also pretty strong penetration in Europe, I think we think it's a good hour to take as a snapshot to try and measure this, what we term the PayPal effect. So here on the left-hand side, you can see that in the 60 days before the PayPal offering was enabled, itBit on average transacted 28.47 Bitcoins in the hour between 3 and 4 p.m. London time. Now that equates to 1.68% of the total Bitcoin dollar marketplace across all exchanges.
Very interesting. And as you were looking at the markets, I'm curious, do we have data on how other cryptocurrencies might be performing? So say, PayPal opened up access to, I think it was a handful of different currencies, maybe five or six. Has there been an impact on the volumes or flows from these other coins?
Yes, so as I mentioned, Ethereum is another coin that they have given access to, and again, same chart, so you can see that the before PayPal and the after PayPal effect in the hour between 3 and 4 London time. So before they enabled PayPal, they were averaging about 250 ETH in that hour. And that's gone up to 770 ETH. And as you can see, the line showing the percentage contribution to the marketplace has gone up steeply as well.
Hmm.
So, we can, given that it's the first 60 days of PayPal being enabled, I think we're safe to make the assumption that all of this incremental flow that is coming through the Bit Exchange from PayPal is really, it's all buying behavior, because obviously with crypto you have to buy it before you can sell it.
Hmm.
So vast majority would be buying. So we do get a bit of a sense, there have been rumors out there, people have been talking about, that some of the price momentum has been driven by the enablement of PayPal and the extra buying flow coming from that channel. And what we've seen is effectively, the Bitcoin side, you're talking about roughly 27 extra Bitcoins being bought an hour, right?
Hmm.
Uh, which is, it's not all the money in the world, but it's not nothing. And if that is a steady stream, and if that continues to grow, probably won't grow at the same rate over the next 60 days per se. And of course, now that you have people who have bought cryptocurrency, some of them will sell it as well via PayPal. But if we're talking about 25 Bitcoins or about 500 Ethers an hour, then that is going to have a price impact.
Hmm. Very interesting. Yeah, interesting stuff. Of course, this comes amid a slew of news that more institutions, more traditional financial providers are taking a serious look at the cryptocurrency market. We just had Mass Mutual, a very large insurance firm in the U.S., buy $100 million worth of Bitcoin. I'm just curious, as we look to the end of the year, I mean, how do you see the narrative for cryptocurrencies forming for 2021 within financial services? Are you expecting these trends to really continue into the new year?
I do, Pete, and I'll tell you why. So within the sort of traditional financial space, there is now I wouldn't say it's a strong consensus, but there is, people are coalescing around this um, relative value method of looking at cryptocurrency. So, for your viewers who may not be familiar with the term, it's a term that's used often in financial services circles. The concept of relative value, and that it and in a nutshell, what it is valuing something relative to something else. So you often see people talking relative value in equity markets. So when you have a market leader in a certain market segment, say Uber, um, you would form a valuation opinion of Uber, and then with a competitor, say a Lyft, you would value Lyft just based on, okay, relative to Uber, sorry, how big is it? You apply a discount. And what people like Stanley Druckenmiller, Paul Tudor Jones, luminaries in the traditional financial world have been saying is that they view the manner in which they value Bitcoin is relative to other assets, and it really ties into the fact that particularly Bitcoin has a limited supply, as a finite supply, and almost every other financial asset does not have a finite supply. And as we've seen from the monetary easing, or money printing, as some people would call it, monetary easing policies of major governments around the world, that the debasement of those of financial assets means that you can think of Bitcoin as something, because it cannot be debased, on a relative basis. So relative to all the other fiat denominated financial assets there are, how do you measure, how do you valuing Bitcoin via measuring that inability to be debased relative to the debasement going on in the traditional financial asset world?
Really interesting stuff. You mentioned the end of the year and, the valuing for fiat. I know that, certainly a lot of the people who are very active within the crypto market are going to be making decisions about how to close out their portfolio for the year. So I just wanted to touch on another recent CF Benchmarks announcement before we break. I know you just released a tax and reporting calendar for clients. Could you explain what it is and why it's essential for your clientele?
Yes, so we at CF Benchmarks, being a regulated benchmark administrator with price indices that are regulated by the FCA here in the UK, audited by Deloitte, we have many inbound inquiries from mainly enterprises who are seeking to value their crypto holdings, but not just to know what they're worth. They need to put them in their accounts. They need to report them to through their accounts for statutory purposes, and also to investors. And they need to, some of these enterprises need to publish their accounts. And so we find that enterprises have been using our indices for this purpose. And then we got to thinking that enterprises, companies are not the only firms, not the only entities that need to justify the valuation of their crypto holdings, because largely thanks to the IRS, HMRC, and tax authorities around the world, private individuals also need to be able to value their crypto holdings in fiat with a reliable, robust source that will stand up to third-party scrutiny, i.e. the scrutiny of the IRS or HMRC. And so, just as a small contribution to making the lives of crypto holders a little easier, we published this, the CF Benchmarks Tax and Reporting Calendar. And what it does is it gives dollar pricing at midnight UTC, or 23:59:59 more accurately, UTC, on key financial dates for the major economies of the world. So tax year, the tax year deadline and the fiscal year deadline of the USA, the UK, Germany, France, Italy, etc. We have published the real-time index price for that crypto asset, for a crypto asset, on that day at 23:59:59, and it's free for anyone to use to value their holdings, report their holdings for that fiscal or tax year. As well as that, there's a section of FAQs on the final page, which is really a how-to, effectively, how to justify the use of our price indices for the valuation purpose. And that is, typically, when you use a valuation mechanism, when you use a price, if someone's going to scrutinize it, they're going to ask, number one, okay, how does where does this price come from? How was it created? And there, someone who's using our calendar should download the methodology documents from our website and send that off to whoever is asking the question and just ask them to read it. This is how it's done. This is how it's calculated. And then should anyone ask the question of how as a user of this index price, how are you satisfied that it's robust, that it's actually been calculated in the way that CF Benchmarks claims, then you should download the auditor's report that's on the homepage of our website, all 62 pages of it, and send that to the person who asked you the question, because Deloitte, the Big Four accounting firm, has audited all our governance, operational, technological, and operational processes. So they should send them that and ask them to give that a thorough read. And then finally, if anyone asks whether use of our indices is appropriate for the purposes of valuing crypto, then they should go to the FCA's website, the Financial Conduct Authority, regulator here in the UK. Go to that website, type in CF benchmarks as in the register. There is an online register of all regulated firms. And then if you type in the word CF benchmarks, you will see that the FCA will confirm the fact that we are a regulated firm. So the FCA deems us to be a benchmark administrator. So that should satisfy them. And if even that doesn't satisfy them, then we'd ask them to go to the CME website to download the product specifications for the Bitcoin dollar futures contract listed on the CME, where it will clearly state that the index provider for that contract is CF Benchmarks. So if it's good enough for the world's largest derivatives marketplace, it should be good enough for our friends at the IRS.
Well, certainly easy to see that you're setting a high bar there. Just wanted to kind of as a last question before we leave. So, you mentioned that people can just go to the CF Benchmarks website, download the report. Do we need to sign up? Do we need to be an account holder? Or is this all just free information we're providing?
This is just all free information. So if your viewers want to avail themselves of the data, then it's just go to blog.cfbenchmarks.com. And there is a post called CF Benchmarks Tax and Reporting Calendar, imaginatively enough. And the report is there, can be downloaded and used. FAQs are there, and all the collaterals that I talked about earlier, the links are there. So it should be fairly easy for your viewers to use, and certainly no sign up required, no account required. Crypto is about making things as frictionless as possible. So we subscribe to that ethos. There's no need to make it more complex than it needs to be. The only caveat is that for some of your viewers who may be very active traders and conduct a lot of transactions, and who may need more complex reporting requirements, i.e. multiple dates, maybe different times of different dates, etc. We published this report. It's nice and succinct. Now, obviously, I couldn't publish the 2.3 billion index values on a report that we actually have stored. So for the year. So if any of your viewers have more active traders and are struggling with valuation reporting for specific trades they've done, then there is an email address that they can contact us, and we'll try and respond to their query, try and get them the data that they need.
Very interesting. Well, thanks, Sweet. We'll be interested to note the final figures that end up in that report at the end of the year. This has been a special edition of Kraken live stream. I'm Pete Rizzo, editor at large at Kraken, and you can find more great Kraken videos across our social platforms, including YouTube, LinkedIn, Twitter, and more. We'll see you next time. Until then, happy trading.